Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and I've left my lines on the chart from last week so you can see how the forecast went. Now, if I zoom in here, you'll see that we obviously had a shortened trading week because of the 4th of July holiday. And last Friday, I forecasted that we would come down in an attempt to fill the gap right here. And this is the first time in 2016 where I wasn't 100% right, but I could say that we are at least partially right in that markets did pull back Tuesday and Wednesday, and then the jobs report came out on Friday, and we had a knee-jerk reaction to the upside as investors came into the market with their buying power. Now, what's concerning me the most, and I'll get to this towards the end of this report, is that the investors are reacting to news, but the news, incredibly enough, is not as accurate as you might think. Remember, unemployment rate is measuring the number of people that are coming off the unemployment rolls. It is not a reflection of the overall labor force and the number of people that are participating in that labor force. So I'm going to show you some charts that'll show you the hard truth and what's going on. So what I think we could see early next week, because we are moving slightly over this resistance, or at least testing that, I think we can safely say that because of the increase in volume, we could see a little bit higher early on. But as I back up, you'll see that we have heavier resistance back here that could lead us to lower prices ultimately. So I'm going to forecast that we will move up slightly, and then later in the week, I believe we're going to pull back just like that. All eyes will be on the volume. If we see a drop in volume, and I'll even go so far to forecast that, I believe that we'll see a drop in volume right before we start to pull back. So keep an eye on the volume bars right there. Now, if I go to a more broad-based index in the Russell 2000, you'll see that again, we came down a little bit during the beginning of the week, came about halfway down my forecast line, and then again we rallied up. So I'm going to erase these lines, and I'm going to forecast that the markets will hold this resistance. I believe that the Russell 2000, again, like the Dow, will make an attempt to go up to test that resistance, but ultimately I think we'll wind up lower next week as the reality of what's going on starts to sink into the investor community. So I'll leave that for you right there. Looking at the spiders, ticker symbol SPY, you'll see same thing played out. We had a bullish engulfing pattern on Wednesday right there after a pullback Tuesday, and then we hit a lower low on Wednesday. We didn't quite fill that gap, but again, we had a higher volume day today on the news for the jobs report. And again, as I back up here, you'll see that we have heavy resistance back here that I believe will hold for the market. So again, I think we'll see early on rally and then ultimately a pullback as we see a drop in volume. And again, I'll write that down here in my line. I believe that we'll see a little bit of a drop in volume before we start to pull back. Now, looking at the VIX, this is why I remain very cautious and extremely bearish for the long term. The VIX has had consecutive red days. All this is all in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive red days on the VIX. We are long overdue for a green candle. So I'm forecasting that the VIX is going to bounce off of this major support level, and then we'll start to see the downturn. The VIX will start to go up before the S&P starts to go down. That's a leading indicator that I've said to many investors. This should be the number one priority, or at least the number one listing on your watch list. Keep an eye on the VIX. It leads the market, and it's a great indicator to follow. Now let's get to the charts that I referred to earlier. This is the unemployment rate. Now, if you look at this since 2010, you would think, oh, our economy is going to storm up because the unemployment rate is dropping. And yes, that number is dropping. But remember, people do not remain on unemployment forever and ever. They remain on for a certain period of time, then they drop off. So this is the number of people that are falling off the rolls. Now, this is the real number right here. This is the labor force and the number of people that are participating in the labor force. This is put out by the Bureau of Labor Statistics, and you can see that since 1997, this labor force and the participation rate has been dropping in a dramatic way. This is the real number, folks. And I hate to see investors be so gullible by following the unemployment rate and thinking everything's going to be fine. But we all know, looking at the global economy, interest rates remain low because the Fed cannot raise them due to the amount of debt that we're carrying. The Fed is doing their best to make things look very rosy in the eyes of investors to get the money pumped into the economy. But there's a lot of people that are still out there keeping an eye on their bank accounts saying, you know, I'm not ready to get in at this particular point in time. So you're going to see the volatility index start to react first. When the volatility is dropping, that means that investors are moving to the sidelines. They're not really committed one way or the other. They're just kind of taking the ride. And when they start to take action, especially on the sell side, the volatility will start to increase. People start to get emotional, and then we start to see downturns in the market. So that's my analysis for this week and my forecast for next. Stay tuned to the market, guys. Next week we have options expiration for the option traders, and the following week on that Monday that follows expiration Friday, we will be having our open house Q&A. So keep your eyes on the front page of themarketguys.com for the registration link, and we'll talk to you soon. So long.
For almost 3 decades, A.J. Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep it super simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. A.J. is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is A.J. Monty, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with 2 questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these two questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have two services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out, or when a trade goes against you, when should I take my loss? The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you've taken the first step in the right direction. We look forward to having you as our newest member.